And now for the MoneroTopia price report segment.
All right, so yeah, I guess we'll go ahead and kick off the price report here. We're looking here at the Monero chart, so not too much has changed.
Don't see any charts or...
Oh, of course you don't. I didn't share my charts. Present. Let's see, share screen. All right, I should be rolling.
Awesome, there we go.
All right, we got the infinite glitch going
Imagine
on.
I just let you do the whole price report without showing the charts.
You know, we've kind of, there was like one time we kind of did that. I was like rambling on for like 5 minutes. You're like, bro, we can't see your charts. So yes, I appreciate you letting me know. Otherwise it would have been more boring than usual. Okay, so we're looking here at the Monero price chart. Obviously, these are the daily candles. Since we talked last week, we had a little bit of a pump, a little bit of a dump, and then a little bit of a comeback. So we're basically flat overall, maybe just average, so slightly higher than we were last Saturday. Yeah, still trying to, I'm still looking to win our unofficial bet here, which had no money behind it, but you know, I'm still right here in candidate first place to win that one. Although I hope Doug is the winner. He deserves it more than anyone. Let's go down to the 4 hour, take a look at what's happening a little bit more fine-tuned. Yeah, not a whole lot here, right? This is just steady up, steady, slight moves towards the upside. And I think that's mostly what Bitcoin has been doing, although Bitcoin is looking a lot more optimistic. We'll talk about that in a second. As far as XMR versus BTC price, yeah, it seems to be stabilizing right here. I get the feeling, it's just the intuition, but I definitely get the feeling that this thing is stabilizing, ready to make another move, whether that's towards the upside or the downside. It could take another week or so of sideways chop, but I really kind of get that feeling that it's like it's like it wants to go to the upside. It's like, you know, I get that feeling like there's some entities out there that would prefer that it didn't do that, but I feel like the support is strong for Monero. I feel like the buying is strong for Monero, and there's just not much downside to be had in terms of the US dollar price. So obviously, you know, the Bitcoin versus Monero chart is a lot of that is going to depend on where Bitcoin goes, because I think Monero does have this sort of continuous upward price pressure, right? We've got, I mean, the only place left that they can start delisting Monero is in the United States, and they're going to have to attack individual states, right? They're going to have to get the most communist of governments that they can to try and convince Kraken that they need to remove Monero from their particular state. I think we're going to see, just like with the United States of Europe, they were delisting countries one by one, and then they delisted the EU totally. If they were going to try and do that in the United States, that's how you would see it happen. That's how you'd see it unfold. I think that Kraken, I think there's a reasonably good chance that there would actually be a court battle over that if there was an attempt to force Monero off of Kraken at the national level. But do you really want to count on that? No. You just want to get onto the available dexes that are popping up, and you want to get comfortable with that. So that you can help your friends later on. So let's see. Nothing else too exciting with them in our price. I guess we could look at the divergences. Poloniex, schizophrenic as usual, oscillating more than everyone else to the tune of about plus minus 1%. Everyone else oscillating around the 0 point with very little divergence there. So nothing to see here as usual. Take a look at the Monero transactions, which are currently... this is like our Monero transactions are even more stable than the price. We just love 25,000, and we have loved it for years, apparently. So 25,000 seems to be the daily transaction counts on average. A little bit of oscillation up, a little bit of oscillation down, but overall pretty stable. Oh, you know, before I forget, someone asked about HBAR. Someone on an XMR chat tipped and asked about HBAR. We will cover that, bro, or brah. We will get to that soon. So right here, we've got the other privacy coins. Xano's actually looking pretty nice here. Like in terms of a technical tea leaves analysis, drawing some lines on a chart. Yeah, it actually looks pretty good here. We've it's gotten, you know, towards the upside. It's now technically putting new all-time highs, sort of oscillating around that area. I would hesitate to call it confirmed, but it's very close. If we close today, and especially if we close tomorrow, which would be the weekly close, if that closes above, or at least at the current levels, that's kind of a confirmation, right? You're looking at greater confirmation that that this thing is actually ready to go for another move towards the upside. Obviously, anything can happen, but I still think that overall, we're not looking at the crash yet, right? The signs, like the crash is coming. Like there's a big crisis coming. It's hard to say exactly when, but for the moment, like we're still not. Doesn't look like we're quite there. So. Overall, yeah, it does look like Xano wants to try and make another move towards the upside soon. So yeah, good for those that are holding Xano. Good for those that invested early. Firo or Firo, I don't know how you pronounce it. Still kind of in this local pattern, right? Still kind of in this sideways triangle, still in this constraining standard deviation bands, right? Oops, wrong one. There we go. Still kind of being constrained by that pattern there. Not an unsurprising thing. I don't see a whole lot of impetus for Firo to go one direction or the other at this exact moment. Probably this thing will break to the upside at some point once the next liquidity expansion begins, and Bitcoin has proven new all-time highs, and everyone is jumping for joy. Pirate Chain. I actually looked at the Pirate Chain volume on Trade Ogre recently, this morning actually, and it's low, guys. Like it's small. It's really not. Like if you wanted to try and take advantage of these oscillations on Trade Ogre, you would have a hard time doing so. There's just not much volume for that to happen, which is probably why this pattern exists in the first place, right? There's just not much volume, so the thing oscillates up and down a lot as people are buying it on various exchanges. Like small amounts actually move the price. So yeah, I mean it's interesting because with such low liquidity, it could definitely be the case that a little bit of buying causes this thing to move towards the upside significantly. So it's one to keep your eye on. Could potentially make massive gains very quickly. You just don't know when that might actually happen. The last massive gains that we saw was 3.5x, which is I mean that's pretty good. The question is, can you actually exit at those levels? Probably, unless you're dealing with like 6 or 7 figures of a position. Darrow, okay, I guess we still cover Darrow because it's a privacy coin, quote unquote. Maybe they fixed their chain, I don't know. From the bottom, they're up 50%. Yeah, nothing remarkable there. Zcash, kind of flat since the last time we talked. Okay, enough on those on the privacy coin markets. Let's take a look at Bitcoin. So Bitcoin, we've talked about this. We said, hey, if we want to get bullish on Bitcoin and we want to think that some kind of pump is going to happen sooner rather than later, we really want Bitcoin occupying this space up here. So the beginning of what looks like a potentially bullish scenario for Bitcoin is unfolding. But man, these markets, especially with a market as headliner as Bitcoin, they really get jacked around a lot. They really get moved around a lot in ways that are designed to take people's money, right? This is true of all markets in general. Like markets, in a lot of ways, especially with the big players behind it, they manipulate prices to the extent that they can in a way that's designed to take money of unsophisticated actors. So yeah, I mean, you've got the hopium here. I really couldn't tell you for sure that whether this thing's going towards the upside or not. Given the fact that in my mind I see this crisis approaching, right, and we'll look at some of the macro indicators to get a feel for that. But with this crisis approaching, I think to myself, like, Bitcoin has to go down with the rest of the market. Like when the crisis hits, Bitcoin will go down with the rest of the market, which means that like you could even hypothetically get a breaking here and then get the hopium back on, right? And people are like, hey, we broke new all-time highs. It's time to go. This is what's happened every time before. And then the crisis hits, right? And you could see a drop back to 50,000. You could see a drop back to the regression analysis line, which I think is like 30,000 at the moment. So yeah, like I am always suspicious of Bitcoin and the way the price movements happen because it's over and over and over again. I feel like a pattern develops, it has a sentiment towards it, and then the move goes the opposite direction, or it oscillates down and then up, down, and then finally makes like maybe the up direction is the direction it goes. Like it just, or it just pumps out of nowhere with like on a calm news day with nothing that like no good reasons, and it just starts pumping 5, 10, 20%. So anyways, I just, it's kind of like my rant, if you will, on why I'm always suspicious of using the technical analysis too strongly on Bitcoin. But sometimes the stars align and you get sort of the news events are aligned with the technical events that are aligned with the macro liquidity situation, so sometimes like things line up well and that gives you a sort of good reasons for making a good decision. Right now, in terms of Bitcoin, I don't have, other than this technical analysis and to be like, yeah, that's a zone that you want to occupy and then see a little bit of pulling above to start to feel bullish on that. I can only say that on the basis of the technical analysis. And I don't feel like at the moment there's enough surrounding stuff to really like augment that analysis or augment these fucking lines, tea leaves on the chart. Right. So yeah, hopefully that sort of gives you a feel there for like, okay, technically, yeah, this is a slightly bullish kind of development here in the price, but I'm not confident that it's necessarily time for Bitcoin to go up. Okay. Anyways, but as far as the Bitcoin dominance, yeah, it actually has broken out of a local line. So maybe we could even try and extend this line that we drew previously. Hey, look, that almost matches up. Yeah, so okay, we've just we quote unquote we've just kind of broken this local resistance line, and now we're at a little bit more of a broad resistance line that developed since basically the end of 2023. Okay, whatever. Bitcoin dominance. We know that thing is probably going to need to go up at some point to be convinced that the bull market is back on. But ultimately, it's more so about setting clear new all-time highs on the Bitcoin chart and not on the daily, not eking out a tiny little new all-time high, not like, but like a clear, convincing break on the monthly, and then holding above on the next monthly candle, right? 2 monthly candles, at least 2 monthly candles above the previous all-time high, which we haven't gotten yet, right? Like kind of, sort of, but no, not really. Like not at this wick. We've had some monthly closes above previous monthly closes. But yeah, I mean, still just kind of like, it's just I just find it hard. It's like, okay, we're bullish, Bitcoin's going up, it's amazing, and then it's just sitting here waffling, vacillating near the all-time highs, but not doing anything. It's like that feels like the kind of action that you would get when you have bags being unloaded onto plebs. So it's like, where is that big bull market impetus? I just haven't seen it yet. I'm not saying it's not coming. Probably it just requires the next liquidity expansion for it to happen, right? So in a lot of ways, we should welcome the crisis, because if you want your bags to go up, if you want the next 2x, if you want 200K, which is probably a reasonable target for the next bull market, we kind of need that financial impetus. So welcome the inflation, boys and girls, or you're not going to get your bags pumping for the most part in crypto. Yeah, I know. I'm aghast at myself even hearing me say that, but hey, that's just how the game is played. And I'm just here to tell you how the game is played as far as I can see it. Okay, apparently Dogecoin has been playing the game well. It pumped a lot. According to the Z-scores, it was one of the best performing coins here the last week. All right, good for the Doge fanboys out there, I guess. Salute to you guys, I guess. We don't need to look at Bitcoin versus the NASDAQ. There's no reason to look at that. One thing, maybe we'll take a little break here. We'll actually pivot here into the macro stuff. Oh, you know what? Forget. Let's talk HBAR because I will forget to talk about it now. Yeah, HBAR. So this is Hedera hash graph. They are a DAG. Do you like DAGs? It is a directed acyclic graph, which is effectively a scenario in which new people doing new transactions validate the immediate transactions which came behind them. So if I want to do a transaction on the chain, I'm going to have to validate if transactions that were just made on the chain. And then someone ahead of me is going to validate my transactions. It's an interesting way of doing scalability, supposedly. That's also how AVAX operates. There's a question over, there have been previous DAG chains, IOTA being the I think the test case, the original one. But they were trying to do weird stuff with like ternary processors. So like right now we use binary processors. Either it's a 0 or it's a 1. Trying to like stake their bags on something with ternary processors, and then they had a major exploit that they found, but they had to like steal everyone's money to prevent a black hat from doing it, and then give everyone their money back. So I mean, I'm probably getting that slightly wrong, but anyways, yes, a Hedera hash graph is a directed acyclic graph network. And this is what their chain looks like at the moment. Looks like their price launched right around the end of 2019. They had a pretty nice bounce. You would call that about a 20x, 17, 18x to the top. And then currently it looks like they have just been effectively bottoming, right? This looks like a coin that is languishing, sideways bottoming. But, there was some level of hype and some level of like overall, it's a new coin, right? It's a cool coin, whatever. It did go up a lot in value. I don't know what their market cap is. But yeah, I mean, they did have visibility, right? Like they weren't a completely obscure nothing coin. They had some visibility, and it was a much heralded launch, I believe. And so the point is that, this might not be a bad punt, right? This might not be a bad place to put a 0.5% or 1% of your net worth and say, hey, there's a reasonable possibility in the next bull market this thing goes up 10x, right? You could make a 10x on that. You put 1% of your net worth and you get a 10x. Hey, that's 10% now of your net worth. So that wouldn't be unreasonable. If we get some kind of crisis event, probably these guys are going to crash, and I would be looking to pick up around these lower standard deviation areas. Hopefully, Hopefully you can see that. It's this line right here. That's like their lifetime, the longest of their low standard deviations. And I would be looking for a crash down here and pick up down there. Again, there's going to be a lot of coins that have this kind of feel to them, right? They're not absolutely new coins launched in the last couple years. They were launched right before the last bull market. They showed strong performance, so there's going to be some kind of visibility there. I would say, hey, Hedera Hashgraph H bar might be a reasonable way there. Okay, that's enough about H bar. There's no, it's not like a privacy coin or anything, so it's not even necessarily sort of related to to our privacy coin fan base here. Okay, so let's take a couple steps back here to where we started early on in the show with the news. And in a lot of ways, I actually like that the news there is first, because that gives us a decent amount of context and a part of the market that's happening, so that when we get to the price report here, you guys have a little bit of context for what's happening. So let's start with Saylor and just address some of the so it's like, it's not, he said some things that were true, right? But then he also said some stuff that was just asinine. So first of all, yes, the banks did seize people's gold, and they opened up safety deposit boxes, right? So if you had gold on stored with the bank, they took that gold and gave it to the Fed boys. And they were like the newly created Fed boys, because that's when the Fed boys came about during that era of the 1930s. So yeah, they seized people's gold. They opened up safety deposit boxes. They didn't kick in doors, but you know what they did do? They targeted dealers, and they made it so that dealers were unwilling to facilitate that part of the economy. And ultimately, they got the gold by effectively voluntary clients. And where the fuck have we heard that before, right? So, yeah, Saylor, the government did conspire, collude, and use their force and violence to get people to surrender their gold and then take it otherwise when it was associated with the banks. So yeah, why would you want to have your Bitcoin in your Bitcoin banks when the government could just seize that at any time? It's retarded. Okay, enough about Saylor. Let's go to Trump with the tariffs and the gutted manufacturing. There was really just like one thing that I wanted to point out here. We don't really need to get too into the philosophy of it all. I agree with what Tuck said. You know, a claim on your labor is effectively slavery, right? Whereas at least tariffs, it's like, okay, it's still bad, but it's not nearly as bad. Now, Trump probably has to sell it, so he's going to sell it fantastically, as he always does. But the reality is that it wasn't because of the tariffs that the United States was strong in the world during that time, you know, as far as exports and everything. When the United States became the world's official reserve currency, right? When that happened, you have to open up your capital markets so that anyone can come in or out easily with low friction. And you export, right? The United States started exporting dollars, printing dollars and exporting them, which means that you can pay for, the rest of the world is now in demand for dollars. They want your dollars because their central banks are now accepting central dollars as the reserve, meaning that you can hire labor and build factories and do everything else outside of the United States much more cheaply than you can do it inside the United States. So what gutted the manufacturing of the U.S.? It wasn't necessarily the income tax, although definitely that's part of it. And it wasn't the low tariffs. Okay, it wasn't the low tariffs that allowed the United States infrastructure manufacturing base to be gutted. It was the fact that it was the world's reserve fiat currency that exited a shitload of money to the rest of the world that had agreed to accept it. That is what gutted manufacturing. So let's just correct, the politician speak where he's trying to sell you this idea that tariffs are good. And in a lot of ways, I actually wonder, tariffs in combination with being the world's fiat currency, this is just an initial question, but is that going to be a disaster, right? Because that's like doing cocaine and Xanax at the same time. Like, one of them is a downer that's going to put you to sleep, and another of them is supposed to like make you wake up. And that's like really, really dangerous in terms of drug habits. Like, you really don't want to mix uppers and downers at the same time. And so like, you would basically say being the world's fiat currency, reserve fiat currency, is effectively like cocaine. But then tariffs are kind of like, clonazepam or whatever these fucking, whatever these like downer make me go to sleep drugs are. I shouldn't say me because I don't take any of that shit. But anyways, yeah, so I'm not sure if like that could potentially be a disaster for the economy. I guess they kind of did the tariffs thing, 4 years ago or 8 years ago or whatever. So maybe it's not a big deal. But, just thinking out loud here, I do wonder about that. So, okay, yeah, you can see here There's one more thing I want to make sure we separate. The International Monetary Fund publishes data by central banks. And what you can see here is that the total foreign exchange reserves held by central banks is in the neighborhood of about 12 trillion, of which the United States dollars represents about 6 trillion. So that's 54% of of the total, and it has been that way for years and years and years. It's like 55, 54%. So the United States dollar is not being rejected by the world as reserve currencies. However, for trade settlement, in a lot of ways, yes, the United States dollar is slowly being moved away from. But this is a meandering process. This is not like a violent thing that just suddenly happened. But yes, you can see the slow progression of Russia and China and other BRICS nations to move away, to try to settle more of their own international funds flows and trade imbalances, to settle those in their own currencies. So yeah, that's definitely kind of a thing to keep in your mind when we talk about the dollar and its dominance in the world. Okay, there's the reserve currency aspect, and then there's the trade settlement aspect, and both are important for the dollar's preeminence. Okay, so with that out of the way, let's go ahead and take a look at some of the macro stuff. One thing that stuck out here to me this week was the reverse repos. So we showed you guys that we've got this this bullhorn pattern, this broadening structure, and in a lot of ways, these kind of oscillations are an indication of instability that hasn't quite cracked yet, right? The instability hasn't fully reached a breaking point. And another thing in my mind, I ask myself if this wasn't a good way to try and hide the fact that, yeah, they're pushing this down to try and prop the markets up for as long as they can, with the sort of surface level explanation being the election, right? The Democrats, putting on my partisan hat now, the Democrats need to keep the stock market propped up into the elections so they can give themselves the best chance of winning. And they're stealing from the reverse repos to make that happen, right? They're taking all these billions, 400 billion. Now it's only down to 200 billion to keep the stock market propped up. Okay. There's some validity to that within that narrow context. But anyways, like the oscillation here does kind of hide the fact for a period of time. It makes you feel like, oh, we're still kind of, yeah, it's just oscillating, but we're still on average, at these same levels right here. But you can see pretty clearly as of this last week that no, I don't buy that bullshit anymore. This has definitely gone to the downside. I would be curious, if this thing continues to go to the downside. It wouldn't even surprise me if it breaks to the downside, goes to zero, and then some crash happens, and then starts pumping back towards the upside. People seeking safety. So I don't know. I mean, it's an eyebrow raising thing. It's I'm not here to tell you exactly the mechanism of how this chart will unfold. More so, just say that, hey, a change has happened here than from what we have seen, let's just say, for the rest of the year, for all of 2024. Like, okay, kind of slowly going down, kind of like hanging out here. And then now this big oscillation pattern has developed. That's an eyebrow raising thing. It tells you that something fundamental is going on in the background, which again is a corroboration point for this concept that I have that, hey, there's a crisis coming. It's just a question of when. So far, I've staked my claim on, on post-election pre-inauguration. But that doesn't mean it has to happen then. It could still happen in February, and we would still be like reasonably, that would still be a reasonably good call to be like, hey, the market's going to crash, and maybe it happens in February, right? Like maybe I miss my ideal sweet spot time frame, but we're still close to target if this thing happens in February or say March. Okay, anyway, so talking about U.S. oil, we've talked about this chart before. It's broken down, right? It broke down. It tried to pretend like it didn't break down, and then as of the past, say, week or so, it broke down again. Again, we're looking for corroborating factors on the thesis, right? Another corroborating factor would be to end up occupying this zone at some time frame. Whenever this thing breaks down into this zone, I'm going to be starting to get pretty concerned that we're looking at an imminent kind of crash here. So yeah, again, we're keeping this in mind. That's a corroborating signal that we would be looking at. Dollar index, I mean, it's stable effectively. Although, yeah, I mean, it's stable. It seems to have begun a little bit more oscillation. And I couldn't even say that. No. Okay, but we can look at gold. The thing that I noticed about gold is that let's go back to the dollar index. The dollar index pumped this week, so we're on weekly candles here. The dollar index has been going up for the past 4 weeks in a row, whereas the gold price has been stable. It's been stable and also up for the last. Let's take a look. The gold price has been basically going up the last 4 weeks in a row. Usually gold is inversely correlated to the dollar index, to the Dixie. If the Dixie goes up, usually gold goes down. If gold goes up, that's because Dixie's going down. So when gold is going up and Dixie is going up, that tells you that the dollar, or sorry, that gold is having significant strength. So at this moment, I really would probably, again, I'm targeting this area here. I'm targeting those upper prime standard deviations, which again is kind of a concept I made up. You just take the standard deviation of a moving standard deviation and add it to the current standard deviation. It's a non-arbitrary way. It's a non-multiplier way of extending the standard deviation higher. You're not multiplying by 2 or 3 or 4, which is arbitrary. It's a constant that you just make up and insert. Instead, it's a way of using the same concept of the moving standard deviation and iterating on like sort of like you take a derivative of a curve, and you could take a second derivative of that curve. It's like the second, standard deviation, if you will. But I can't use that because second standard deviation means you multiply by 2. Sorry, I know that's kind of into the like technical statistics there. But at any rate, gold's still strong. I would still continue to hold it. I'm not looking to sell at the moment, but maybe I will be. But we'll have to wait and see. That'll probably be post-crisis. I'll sell gold and go into something that has higher risk as the liquidity expansion begins in earnest. Okay, so NASDAQ and stocks didn't do a whole lot, kind of been chopping sideways here for a while. They gapped up on the weekly, tried to go up higher, and then finished flat. NASDAQ tech stocks still have not made a new all-time high, although they're flirting with trying to get there. S&P has made all-time highs, but I don't think that was this week. Yeah, this week, I mean, just still kind of flirting at the top of that. One thing I want to do is go and show you guys something else on the S&P. As you know, I did the regression analysis for the S&P. The strongest part of this regression analysis is not the tops or the bottoms, but it's actually the blue line. It's just the overall data, which is funny because Bitcoin's the opposite. The overall like midpoint regression of Bitcoin is really not our strongest regression on the Bitcoin price. It's the boundary prices that to me had the most signal there, that was like the most valid of everything. Whereas the S&P is the opposite. It's not the tops and it's not the bottoms. It's really this middle point. It's the blue line. And that makes sense in a way in terms of keeping the market stabilized to the greatest extent you can. But the thing that I really wanted to point out wasn't the regression analysis. I wanted to point out this line right here. If we just drop a line from the top of the 1929 bubble, and then we go to the top of the .com bubble, and we just draw a straight line there, you end up with this situation where you can see that we are now approaching that top line. Let's go down to the weekly. You can see that the S&P 500 is now approaching this extremely long-term 100-year capping line. This is very similar to the gold line, where it's like, hey, this line has been established now for decades, since 1980 and then 2011, just touching 2 points, right? We're getting towards that point on the S&P. It would concern me to see the S&P break this line. That would actually, in my mind, start kind of signaling a breaking of an actual breaking of the monetary system. We've been talking about it for 2 decades now in the freedom community. Hey, the monetary system's going to break, be careful. And it's like, okay, well, it hasn't broken yet. When, bro? When? Soon, bro, soon. But if this thing actually does break, I start to wonder about actual like hardcore inflation that is intractable, that the Fed can't solve if the S&P starts getting above this. We'll have to see. I'm not sure that that's necessarily going to be the case. I do think that would actually be a very, very good stopping point for the S&P for a period of time. Which kind of odd because, if I talk about this like crisis response, liquidity expansion, that should cause the S&P to break this line. So, yeah, I'll have to think about that some. Just kind of sharing with you guys openly my thoughts on that. Okay, finally, let's go through some of the bond stuff. What's interesting about what's happening here with bonds is that the yield curve continues to uninvert. You can see this right here on the daily. So, yeah, this thing has continued to correct to uninverted. But even as for the past week or so, bonds have been going up, right? So what's happening is the long end of the curve, the 20-year, the 10-year, the 30-year bonds are actually making their way up and correcting finally to trying to get above the 3-month and the 6-month, which I find to be very interesting right now, because that means that that means that people are not going to the safety of bonds, right? The rates are going up on these bonds, despite the fact that that the stock market is flat. So I'm not quite sure what to make of that. And then finally, on the macro stuff today, I wanted to show you guys something called the yield curve. I guess it's up here, the high index US. These are credit spreads. These are colloquially known as credit spreads. And so what credit spreads are is the difference between corporate bonds and government bonds. So when the economy is very happy and everyone believes it, you end up in a situation where the difference between the government bonds, which are considered to be zero risk yield, So the difference between the rate that the government offers you and the rate that the corporations offer you for bonds, that tends to be very low because everyone believes the economy is good. So everyone thinks, hey, corporate bonds are safe. They're not completely risk free, but they're relatively risk free. So let me get into a corporate bond because they're yielding higher. But what happens when the economy starts going into crisis mode? Everyone says, "Oh shit, these corporations, they're going to collapse. So I don't want a corporate bond. You know what? If I do, you're going to have to give me like 10%, 20% because I'm afraid you're going to go bankrupt and I'll lose all my money." So in which case, what happens here to the credit spreads is that they spike. They spike up because now the corporations have to offer a lot more yield on the bonds than the government has to offer. Because again, the government can just print the money, which corporations can't do. The point of this chart is to note that long periods of low credit spreads are typically like that's what you see before crises. So, for example, here's the that whole 2020 thing. I don't remember what happened there, but something happened in 2020, and then so yeah, we had the economy caught a cold, if you will, and then the credit spreads spiked, and then they spent a long period of time coming down, getting calm. Oh, and then what happened in 2022? The bear market. So credit spreads spiked again. Again, people don't want to buy your corporate bond unless you give them an attractive interest rate when the market, like when the economy is doing bad, because they're afraid you'll go bankrupt. You have to offer them a better rate. And then what's happened since then, right? We've had this long, slow cool off period where credit spreads come back to even. In fact, what we're looking at right here is credit spreads that are historically low. So let's go to the monthly so we can see this a little bit easier. But you can see that credit spreads are now historically low. The last time we saw credit spreads this low was right before that whole 2008 fiasco. But yeah, credit spreads have continued to go down over time. So that doesn't, again, this isn't even like a leading indicator chart. Like once this thing spikes, the economy is already like in the shitter, right? You've already seen the market crash. They happen concurrently in tandem with each other. So you couldn't look at the credit spreads and be like, oh my God, they're spiking, so the market's about to crash. It's like, no, the market is currently crashing along with the credit spreads spiking. But what this chart does tell you is that, hey, we're not entering that kind of profile, that kind of zone where credit spreads have closed that gap towards the government bonds. And you're looking for a moment when they might spike up back again. Now, that doesn't mean it has to happen next month. It doesn't even mean it has to happen next year necessarily, because some of these patterns go on for a couple of years before they spike up. But it just lets you know, hey, you're entering that profile where the risk is increasing. So, just thought that was interesting. Thought some of you guys that get off on the macro economy might, and who actually gets off on the macro economy other than JPOW, I don't know. But at any rate, yeah, I just thought that was interesting. Maybe a cool thing to share. Nothing else. Oh, I think we had some unemployment numbers. Yeah, we did actually have unemployment numbers. So yeah, the unemployment came down again, just ever so slightly. So I know it's kind of hard to see. We'll zoom in. Yeah, so we've had 2 months in a row now where unemployment came to the downside. This would hypothetically potentially indicate a slight danger of inflation coming back, not hugely, but we look at this chart specifically to try and time the next market crash, because when this thing starts spiking and you trigger the SOM rule, it basically means that a recession is coming and a foregone conclusion. So at the moment, 2 months in a row of sort of downtrend here. That's not out of the SOM rule. How can I rephrase that? That hasn't invalidated the SOM rule. That hasn't invalidated any previous patterns that we've seen, like in the 2008 crisis or the dot-com crisis. You've seen instances where it's like, okay, you can have little blips where it takes a cool off, where the unemployment stops spiking for a period of time. But we kind of would need to, we'd really want to see this thing, spike back up. The problem is that these numbers are delayed by about 6 weeks. So if there's a crisis coming, it could be that the unemployment is already spiking up as we speak. I mean, we won't get those numbers, or let's just say it's November, right? Let me rephrase. Let's suppose that it's December that the crisis strikes, and that unemployment in December is already, spiking, but we won't get those numbers till we won't get the December 1st unemployment number until later in January, or maybe it's February, right? But it'll be like 6 weeks delayed. So anyways, all I'm saying is that, again, this is not a leading indicator chart, except for noticing what the trend is doing. And right now the trend has triggered to say, hey, the recession is coming. So again, big broad picture. What are we looking at in the macro? Why do we keep saying that there's a crisis coming? Because all of the indicators that we can look at tell us that we are now in the profile to be looking for a crisis in the not distant future, right? So typically you would say like within 6 months, within 8 months, whatever. So yep, we're trying to use our other skills and our other like indicators to narrow that time frame to be able to really fucking smash the opportunity there if it comes. You can do things like buy the inverse VIX. Is inverse VIX? No, you can do things like buy the VIX. So you can't buy the VIX directly, but there's things that sell that. So like if you trade stocks, you can get in there, buy the VIX. You can take short positions. You can take short positions against crypto, right? Just like the opportunity to protect yourself, to make a quick buck. And then to get long once the liquidity expansion begins earnest. We'll talk about that once we get there. There's usually about a 30-day delay between when the liquidity expansion begins, the emergency measures are taken, and the market actually bottoming. So, yeah, we'll talk about that later once we get to that point, but we're not to that point yet. So, with that, I think, that should be enough today on the price. Just keeping you guys oriented around like the big picture, what's going on, trying to help you understand the monetary system a little bit. I'm totally for, if Trump wants to get rid of the income taxes, my contention has long been that Trump that has a higher probability of doing things that will personally benefit me. I just worry that overall, like the nation will go back to sleep. Like all the people that are freedom people will just be like, oh, we've got our guy in office. And it's like, yeah, last time he wasn't your boy. Like last time he didn't do it. Maybe he's woken up. Like it's possible. So I would like to be proven wrong on Trump. I would love to see him get into office and do some things that are more than token freedom gestures. And eliminating the income tax and the IRS. Well, maybe he can't eliminate the income tax, like per law, but maybe he can eliminate the IRS, or he can direct them like to stop doing things, right? Or to hit the brakes, or he can appoint people that are going to effectively like really, really scale back their operations. Like that's actually like a positive thing. So I would love to be proven wrong in those regards.
It's a
so
pipe
here's to
dream,
hoping.
but it's nice to think
It is-
about. The
it is probably a
downside,
pipe
though,
dream.
is that he doesn't have a second term to like do things for. Like this is it, right? So he doesn't have certain things he needs to necessarily do to get people to vote him next time.
Yeah, he's got
There's no
that
voting for him
going
next
for him.
time.
So maybe we'll really see a little bit more of what Trump really wants to be, with the.
I mean, unless he loses and he tries to run again, but I don't think it's going to happen. I do think he
Yeah.
wins, and if he doesn't actually win, I mean, I doubt it. But if he doesn't, I don't think he's going to run again.
No, I don't. I wouldn't see him running again. He's starting to get kind of old, anyways.
Yep. Super chat from Tippy. Appreciate your chart, Magic Body.
Thanks, Tippy. Yeah, I guess that's all I got for you guys today.
All right.